Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions today, then please ask them in the comments of the live feed. For any more advice, and if you haven't already done so, please join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During today's live session, we will be running a poll, so please do engage with that and I'll reveal the results at the end. As I said, thanks for joining us today. For those of you who haven't seen me before on one of these sessions, my name is Judith Dugdale and I'm a chartered accountant based up in the northwest of England. I work for MHA Moore and Smalley, which is a large independent firm of chartered accountants based across Lancashire, Merseyside, Cumbria and Greater Manchester. As a large independent firm of chartered accountants, we cover all manner of business advisory and compliance work. So we do year-end accounts, audits, personal tax returns, company tax returns. But on top of that, we also offer a lot of strategic advice work, be that tax planning, looking at buying and selling businesses, raising large amounts of finance. We also have a team of independent financial advisors to help with pension and investment advice, as well as having a couple of outsourcing departments, which includes a very large payroll team and the team that I head up, which is the digital solutions team. Within the digital solutions team, we outsource a lot of bookkeeping work. So that is where an organisation doesn't have the time to do their own bookkeeping, and because they know the importance of keeping things up to date, they pay for my team to regularly update their bookkeeping systems, do their VAT returns and produce management information for them on a regular basis. The other part of our digital solutions team is that we do the ongoing compliance work with clients. So as I said before, year-end accounts, we don't do any audits. Predominantly, we deal with smaller businesses. And the one thing that all our business clients have got in common is that they use cloud accounting software. We have been an elite partner with QuickBooks for many, many years now. And we have well over 1,000 clients using QuickBooks Online. What we do with our clients is not only give them ongoing advice in terms of how to use the software, but also how to improve the profitability of their business, help them grow, and ultimately look for that exit and how to achieve a good price on sale, or possibly passing the business down to other people within their organisation or their family. We also focus an awful lot on helping new startup businesses and businesses around the rest of the Moore and Smalley firm in terms of looking at their bookkeeping systems they have in place now and helping them digitalise those systems or move from a desktop solution to a cloud accounting solution. We offer an initial review, we do the setup for them, and then we offer some training for them to use it themselves, as well as ongoing support, which enables us to help them with any queries they have as their business changes or grows, but also keep them informed about different third-party apps that could help improve their bookkeeping systems even further. So what I wanted to do today briefly was, before I start asking any questions, just waiting for those to come through, was just to touch on the importance of bookkeeping. As I mentioned in the intro, we do a lot of outsourced bookkeeping for clients. And I mentioned that the reason we do that is because they acknowledge the importance of bookkeeping. And the first and foremost reason and the importance of it all is to have up-to-date information. The more up-to-date information you have, the more control you have and the better decisions you can make about your business. What we do is we kind of break it up into three main reasons why you should make sure your bookkeeping is always as up-to-date as it can be. And the first and the most important one is for you and your business. If you have up-to-date information, you can, as I've just said, make really quick decisions and make more informed decisions. And yes, you could have an awful lot of intricacies within your bookkeeping, but you can also keep it fairly simple. And the simplest things I would say to you is, if you're using QuickBooks Online, for example, first of all, make sure your bank is connected to the software. This means that constantly, every day, your transactions that go through your business bank account will feed into the software. We would recommend that each day or every other day, if you possibly can do, is to come into the software and clear off those transactions. You can speed up this process really well by setting up what we call rules, which enables you to do recurring transactions that come through the software. Set rules so that they're automatically posted for you to speed up the amount of time it's going to take you to clear off those transactions. We would also recommend, wherever possible, you email all your invoices out to your customers. This is for two reasons. One, they get the information quickly, they can access it through their emails whenever they want to check it, and it should hopefully mean you get paid a bit quicker. The other reason is that you can then see if they've actually received that invoice, and you can see whether they've read that invoice. Occasionally with software, the invoice, when it's emailed out, can get stuck in people's spam. So if you regularly go into your customer's contact area within the software, have a look at the invoice that you raised, you'll be able to see at the bottom of the screen whether they've actually read that invoice. If they haven't done, resend it so that you're sort of prompting them again that there's an outstanding invoice due to you. But in addition to this, you'll be able to just put a little note on as well to say that it's now overdue or it's coming up for the due date. The software, if it's up to date, you'll be able to run a report to show you all the amounts of invoices you've raised to your customers that have not yet been paid. And this will give you an idea of the money yet to come into the bank. Coupled with looking at how much you owe people. So this involves you entering invoice, be it a BT bill, a mobile phone bill, your website development costs, or buying stock. If you put those invoices into QuickBooks Online, you'll be able to run what we call an aged creditors report, which will show you how much money you owe to people and how old it is. You can also run things like collections reports and payment reports, which show you using the due date when payments are due to come in or due to go out. That information, coupled with a completely cleared banking transaction scheme, will enable you to see how much spare cash you now have within the organisation. And that means it's really easy for you to decide if you can do that extra bit of advertising, if you could maybe look at renting a unit if you started to grow and you need a bit more space. You can look at whether now's the right time to buy some more stock. And equally, it might just be that you want to see whether there's a chance for you to take a bit more money out of the business for yourself, or maybe take on some extra staff. If you don't have that up-to-date information, you're effectively guessing. And whilst when a business is very, very small and at the outset, your bank balance might give you a really good idea of where your business is. As your business grows, you can't rely solely on the bank position. You need to look at the income yet to come in and the costs yet to go out. The second reason I would say keep up to date with your bookkeeping is when you do start to grow, or you maybe need to invest into your business, be that opening up a shop, be it getting a unit to store some stock, or looking to employ some more staff. If you don't have regular up-to-date information, you won't know what spare cash you've got and whether you've got the headroom for those additional costs. Furthermore, if you wanted to buy a van, for example, and you needed to go and get some finance from the bank or from a funder, they're going to want to see some management accounts to prove that your business is trading profitably and can afford those repayments. If your bookkeeping isn't up to date, the first thing you're going to have to do is spend a lot of your valuable time bringing it all up to date. And then you will probably have to engage with an accountant or another finance person to review that information, to send it on to the bank or the finance provider. If your information isn't up to date and you don't have the time to get it up to date, either A, you don't get that funding, or B, you're going to have to pay a professional like my team to come in and create that information and spend an awful lot of time putting it all together. The third reason why we would always recommend keeping things up to date is to get the closing position for each financial year as quickly as possible. As I said to you at the start, the majority of our clients use QuickBooks Online, and they keep that information up to date following the advice that we've given them. And that means that we're on the 12th of April now, we've already got 3 or 4 of our clients with March year ends that we've already started work on their year end accounts. By the end of April, we will have their year end position with the corporation tax that is due on those accounts that we've prepared. That gives them 9 months to save up that money before they have to pay it to HMRC, which means that they can further better manage their cash flow. So the other thing is as well is the better the information we get as accountants from you, the quicker we can prepare the accounts, which then means our fees shouldn't be as high. If our fees are not as high for doing the bookkeeping work, the year-end accounts work, you either then get a smaller accountant's fee, or even better, you could use the extra money within the budget you set aside for accountancy to have some strategic advice and get us to really delve into the figures with you and help you plan for your forthcoming year, set some budgets and really push your business forward. So we've got some questions that have come through, so I'll start taking those from you now. The first question has come through from Facebook Messenger from Jacobus, and he says, Judith, the last couple of months have been hard on my business. Is it okay to have negative cash flow for a couple of months? The big thing that you will probably have heard for quite a few years now, it was a phrase that's always been around in the business world and came really to the fore in the crash of the late 2000s and in the early 2010s. And that was that cash is king. And I really can't reiterate that enough. So a business can trade and make losses as long as it's got cash to keep paying those suppliers. If you haven't got cash, then your business will really struggle. Having said that, if you've got access to some funding, be it maybe personal money that you can put through, or maybe you could get an overdraft from the bank, or maybe you've managed to get a business bounce back loan while we were in lockdown, and that has provided you with some money, it is fine to have some negative cash flows for a few months, as long as you've got some cash in the bank. It quite often happens that you have to raise some finance to see yourself through some hard or tough times. And this even happens when businesses are growing too. So for example, if you're suddenly decide on a new product range and that product range really takes off, in the first instance, you're going to have to buy all the stock. So you quite often see a negative cash flow while you've bought the stock and you're first trying to sell that on and recoup the money that you've invested. In those circumstances, having a negative cash flow for a few months is absolutely fine, as long as you had the cash in the first place to buy those goods in, because the money will flow through. I think what's really important for you, Jacobus, is to look at what the cash flow looks like in 2-3 months' time. Have you got enough cash coming into the business to then switch that into a positive cash flow later down the line? Because if you haven't, then now is the time to look at how you're going to change that so that your business can survive the next few months. I've got a question from Alex, Facebook Messenger. And this one says, I've signed up to QuickBooks last week. What features would you say are the most important I get familiar with? It's a really good question. I would say the first and foremost is the bank feed. Hopefully you bank with one of the banks that there's the open banking regulations all set up with, which, I mean, QuickBooks cover, I'd say 90% of all the banks that are out there. So hopefully you're with one of those. It's really simple to connect your bank. From memory, if you just go into your bank transaction screen, you'll see in the top right-hand corner, connect account. Or it might say link account. If you click on there, it talks you through, it brings up all the banks, you click on which one's your bank, you follow those instructions, and then that will set up a link, which you just then have to go in and refresh every 3 months. And it will bring through all your transactions as you see them on your bank statement. And then from there, this is where it's a really easy way to get your bookkeeping done quickly, is that you just say for those individual transactions what they relate to and where you want them to sit within your software. That to me is a really, really key first thing to do. The second thing I would say that's really key thing is to get your customers set up. If you have customers that you send invoices to. Obviously, if you're an online retailer or you're running a pub or a restaurant, you're not actually going to have many invoices, if any, that you send out to customers. So this might not apply to you, Alex, but if you are somebody that sends out invoices, get your customers set up. Make sure that you have all the details in, so you have who it needs to be addressed to, make sure you know who their email address is, the right person to send it to. Make sure you have all the bank details on your invoices, so that if they want to pay, they can pay quickly. There's even facilities within QuickBooks now where you can improve the frequency of getting payments and how quickly you can get paid. So you can turn on to get paid through PayPal, for example, and you can put in credit card details and things and go and get paid through by Go Cardless. So there's lots of different ways that you can improve the interaction with your customers so that you do get paid a bit quicker. And I would say those two are the key things, is getting your money in and accounting for it all within the software. The third thing I would highly recommend is using the receipt capture facility within QuickBooks. And this is where you use the mobile app to take a picture of any supplier invoices or any receipts for things that you've bought. Take a picture of them, and then they will come through into the QuickBooks software. And then when it's in the software, you can then match that to the payment that you eventually make out of the bank, be it later down the line or immediately. And what this does is it allows the picture of the receipt and invoice to come into the software. And this is incredibly helpful to your accountants or your bookkeeper, because we can then see what it is that you've paid. We can see whether it's gone to the right place, and it saves us having to get in touch with you to ask you to send us through an invoice. It really, really does save accountants an awful lot of time. And unfortunately, when you engage in accountant services, you are effectively paying for their time. So it's really, really good advice to any business out there to try and make our life as easy as possible in terms of doing the preparation of reports and accounts, financial statements, whatever it might be that you're asking us to do. If you make our life as easy as possible, then it obviously costs you a bit less further down the line. The next question I've got is from Jamie on Twitter, a direct message. And this message says, "Good morning. I've been doing my bookkeeping myself for a few months, but it's taken me a lot of time. And I also feel like I need some guidance. So thinking about finding an accountant. What should I think about when choosing an accountant?" Well, thanks very much, Jamie, for your message. I always say to friends, families running businesses, and to people who come to me asking for a quote, is that always get a couple of quotes as well. And if you can't necessarily get to see somebody at the moment due to restrictions, do a Zoom call. And I would say straight away, if you're trying to engage with an accountant and they're not capable of doing a Zoom or a Microsoft Teams call with you, then really they're probably not the best forward-thinking accountants to be working with somebody using cloud accounting software. That leads me on to the second thing. You need somebody that is well-versed with QuickBooks Online, if that's the software you're using. You want somebody that you can ring and ask for help and will know the software inside out and be able to help you when you need it, not have to go off and research how to solve the question that you've got. The best place to find an accountant that is an expert in QuickBooks Online is to go to the Find Accountant function within QuickBooks itself. And then you type in your area where you are, and it will come up with a list of accountants in your area that are linked to QuickBooks. There'll be either like a silver partner, an elite partner, whatever it might be, and it will tell you within that directory listing their experience, and you can contact them directly from that forum. And then they will come back to you and hopefully arrange to do a Zoom meeting or a call. And then they will go through what you need to get out of an accountant and what they can offer. And based on those interactions, you would then decide who was best for you. The next question from Hamza, and that's from Instagram direct message. She's asked, Judith, what is the difference between the VAT control and the VAT suspense? So for anybody on here that's using QuickBooks Online that is VAT registered, you may well have noticed in your chart of accounts that you do have two nominal accounts. One's called VAT control and one is called VAT suspense. So the VAT control account is where all the input and output VAT on anything you enter into QuickBooks goes. So when you enter a sales invoice and you've got VAT on that sales invoice, the VAT element goes into the VAT control account. When you get an invoice from your supplier and there's VAT on it, when you enter that into the system, the input VAT on that invoice goes into the VAT control account. And it's that information within the VAT control account which then makes up your VAT return. So when you go to the taxes section within QuickBooks, you'll go in there and you'll see that it is always showing you a list of all the VAT returns you've done in the past and the open return that is waiting for you to prepare. When you click prepare return, it brings up all the input and output VAT and your net sales and your net purchases, and it's pulling that information from the VAT control account. The VAT suspense account is effectively the money that you owe on the last return that you have prepared but not yet paid. So when you go into that taxes section and you prepare that return, when you click to submit that to HMRC, it takes the amount due, takes that out of the control account and puts it into the suspense account. So effectively, it's moving all the input and output VAT, taking it back down to nil in that control account, but then moving it to the suspense account. When you then pay that VAT return bill, or if it's a refund, when you get the money in, the transaction that comes through into the banking transaction screen then gets matched off against that suspense account to bring that back down to nil. And in the meantime, your control account is further building up a balance from your sales and purchases that you've entered. I've got a message from Jill, an Instagram direct message. She is asking if there's any benefits to having a business credit card. She's a consultant and doesn't have any employees. So the answer to this is purely really whether your business itself needs one. So the advantages of a business credit card can be ranging from some of the perks that the business then gets as a result of it. So you might get a discount. Like for example, if you had a Tesco credit card or a Sainsbury's one, you may then get discounted amounts on fuel that is purchased on that business card. If you've got an Amex card, you get points towards future flights. So when you're doing a business, if you had to fly for business purposes, you can use those points to reduce the cost down of that flight. So that's like on a business related benefit in terms of why you would choose one card over another. The main benefit for a business credit card tends to be being able to buy things on the internet if you don't have a debit card or you don't have enough funds in your business account. Most people use a business credit card to just go out, buy all the bits that they can't quite afford as that second within their business current account, but they know they've got money coming through. So by the time the credit card is due at the end of the month or the middle of the month, they've got enough money in their current account to then pay that business credit card. So it just enables them to manage their cash flow a little bit better. The other thing is it can build up a bit of credit rating for the business. If you're buying things on a credit card and clearing it straight away, then any finance company can see that you can manage debt well, so it increases your credit rating. So really, it's what works best for you and your business. If you need some extra access to some cash, if you're buying things online where you need a card, any of those reasons, really, that is one of the benefits for having a business credit card. I would caveat that if you do get a business credit card, really do try to repay those balances as you go along. Don't make it almost into a form of debt that's longer term, where you're building up balances month on month, because the interest rates on the credit card will be a lot higher than having a bank loan from the bank. So if you do need some extra cash into your business, and you know that you're not going to be able to clear that balance within the next 3-4 months, then I would suggest you speak to your bank about a bank loan as opposed to using a credit card to fund that cash gap. Question from Nicodem on Instagram. He is asking, quick question, how do I convert profit into cash flow? So It's a really good question, and it's not a particularly easy one to answer. A lot of people can confuse profit or loss with their cash balance. And in some businesses, it is exactly the same. If you get all your income in as soon as you deliver the service, so maybe a restaurant, and you pay for everything as you go along, say you do cash on delivery when people deliver you your goods, your bank balance is always going to be how much money you've made, because you've got nothing else coming in. But that is really, really rare, that everything you buy and sell is paid for instantly. So therefore, your profit is never going to be the same as your cash. To convert the two, we have something that's called a cash flow statement. And actually within QuickBooks Online, that report does exist within the software. And what it does is it takes your profit and loss figure that's in the account. So your profit and loss figure is all the invoices that you have raised to customers, or if you are, for example, a bar, a restaurant, or an online retailer, or the income you've taken over that period. And then it deducts off any supplier invoices or any payments out of the bank in that period that relate to expenses, so things that you need to run your business. And it gives you a profit and loss at the bottom. There are other things in your profit and loss account that are not cash based, things like depreciation, which is an accounting term, which is where we take an asset within your business and then write this off over a period of time. And to write that off against your profits over a period of time, we put through depreciation. So when you're doing a cash flow statement, you would take your profit and you would add back the depreciation. It also takes into account things that you've paid for in advance and things that you've not quite had yet. So you might be running a report and you haven't had your website cost for the month yet. So you have to adjust for that through accruals. So there's a cash flow report that will take your profit, it will adjust for those elements, it will just adjust for any stock that you have, and then it pulls back through into what we call a cash position. And that will reconcile to the start of the cash at the period you're looking at and the end of the cash at the period you're looking at. It is quite a complex area to try and explain in a couple of minutes. So I would suggest that you maybe speak to your accountant to run through that for you. I think we've just got time for one quick question, and that's from Reese. He's an artist. He sells paintings, but thinking of a career change to become an accountant and continue selling art on the side. Any advice for a future accountant? I've actually had a question like this before. So yes, accountancy is a great career, always needed. It is very hard and it's a lot of hard work. I would advise you to go and look at AAT qualification, which is something you can do in college 1 day a week and after work. So it's quite an easy way to get into it, and it flows through over a period of anything from 2 to 4 years, depending on your history in terms of GCSEs, A levels, that type of thing. So yeah, first thing, go and look at your local college and research AAT qualification, and that would be your first way of routing through the process of becoming an accountant. So I'm afraid we're running out of time now for any more questions. The poll question today was about sacrificing anything for employees, and today 75% of you have answered yes to making sacrifices for your employees, and 25% of you have said no. And I think that probably reflects what a majority of my clients would say, because people do make so much sacrifices for their employees, so much more than you probably even think that you do. And I think it's really good that that's flowed through from the people answering today. Really appreciate everybody that's showed up today to watch the show, and for all those that you've asked any questions. If you do have any further questions, please do get in touch with QuickBooks support team on Facebook, or contact me at Moore and Smalley using our email digitalsolutions@mooreandsmalley.co.uk. If you want to find out any more about myself or the digital reviews that we're now doing with our clients, where we look at the level of bookkeeping and the accuracy of it, then please do get in touch. If you visit our website, www.mooreandsmalley.co.uk, you'll see a whole host of videos and blogs and things all around things that will help you in your business. And then looking forward to tomorrow on Ask the Expert. Ying Tan, the founder and chief executive of Dynamo, which is a company with a fresh approach to mortgage advice, is going to be on the show. So please tune in to learn about any pitfalls and to avoid any issues when scaling a business. Finally, a reminder that if you need any more advice, to join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7.